Today, we're going to talk to you all about something that banks will not tell you about what Trump just changed. Okay. This affects banks and credit unions. Let's get right into today's information. So, first things first, the CFPB under the Trump administration, these are some things that they're changing. Okay. They are putting something in the process right now to weaken the enforcement of the Equal Credit Opportunity Act. Okay. So you're already seeing this will affect how you are borrowing money. Okay. Now, I know it says plans because it's not in effect yet, but it's about to be finalized here very soon. This is not something that needs, Congress to approve. This is doing it through the CFPB as essentially they were policing these banks and credit unions. Let's talk about it. So now they want to remove something called disparate impact, not desperate. I thought the same thing. It's called disparate impact from enforcement. I'm going to break that down here as well. And regulators would need proof of intent, not just unequal outcomes. Now, I'm going to break this down to something that you'll understand a little bit easier as we go through this process here as well. All right. And by the way, if you're looking to accomplish your credit goals, we can help you. Whether you're looking to increase your credit score, qualify for homeownership, or lower your monthly car payment, we can help. Scan the QR code right there on your screen so we can look at your credit report and create a custom game plan for you. All right. So now that's one thing that the CFPB is changing. They're also changing something else. The Consumer Financial Protection Bureau will run fewer exams starting this year. Now, what is that exam process? Let me break it down. All supervision will be virtual only. So that means when they would normally do a bank exam, a credit union exam, they would normally stop into the branch, okay? And they would look through some things just to make sure that the bank and the credit unions are doing what they're supposed to do. Well, now that's no longer going to be the case. No more in-person visits. It's now going to be virtual, okay? Which means they just need to talk to a bank representative instead of actually being there. You know, it's a little bit different. Think of it like this. Think of you going to one of your favorite restaurants and the food inspector is now doing an inspection via Zoom instead of on-site inspection. You guys see the difference, okay? Now, examiners will ask less data heavy and less invasive questions. Okay. So this is what we call breaking down the system. They're deregulating how the banking industry, how the credit union industry is ran. All right. Now, when you have deregulation, what does that mean? I know what you're thinking. Let's keep going. Now, the goal with them doing these changes, because I'm going to break this down further, the goal is to reduce compliance burdens on lenders. Here's the thing: oversight is pulling back, not tightening. So, anytime that happens, that means the consumers have less protection. This clearly favors lenders over regulators, and consumers will need to be more proactive and informed, which is why I'm making sure I get you all this information today. Okay. Now, what does disparate impact means? A rule or policy can be legal on its face, but still hurt certain groups of people more than others. Now, the intent doesn't matter. It's about the outcome, no matter what the lender meant to say. If the results are uneven, then regulators could step in. What does that mean? I'm going to give you guys an example here. All right. So now a lender says, we don't approve loans under a 680 credit score. That rule is going to apply to everyone equally. However, if it disproportionately blocks certain groups of people from getting approved, that's considered disparate impact. Now, there's no racist language. Let me pause. The fact that we even have to say this, okay, there's no racist language, there's no bad intent, but still a problem under the rule. Okay, let me give you all a couple of other examples as well too. Why regulators used it? It allowed regulators to catch discrimination that wasn't obvious. Are you all listening to me? So anytime that you create a rule to make sure that the rules are the same for everybody, and then there's slight changes to that rule, that's going to slowly open up a gap of people that don't get approved for whatever reason. Okay. It prevented lenders from hiding behind neutral rules. Like that's just what we do here. It focused on fair outcomes, not just fair words. Now, why does it matter right now? If disparate impact is removed, lenders usually need proof of intent to be punished. So that means you got to show proof that you were denied because of your race, because of your, let's say, I don't know, marital status, and the list goes on. Okay. Or who you voted for. Let's see. Fewer discrimination cases are going to move forward, and enforcement is going to become much harder. This is one of those things like, why even make changes to it? Why even make adjustments? Okay. Now, let's keep going. What does this mean for consumers? Potentially faster approvals and fewer delays. Potentially faster approvals and fewer delays. Okay. Fewer protections if a lender pushes their boundaries. I know what you're thinking. Well, my bank wouldn't do that. Banks have done it in the past because that's just how the way it was done. Okay. Lenders have more protection, which means consumers have less protection. Now, mind you, let me remind you what the Consumer Financial Protection Bureau, why they're named that and what they do. It's in their name. So now they're making a change that protects the lender more and consumers less. Everyone's a consumer, regardless of what party you voted for, regardless of what skin color you are, regardless of where you're from, you're a consumer. Okay. So it's harder to challenge discrimination. And discrimination is not just race, just so we're clear. Okay. Because you could be discriminated against based on where you're from. You could be discriminated against based on your accent. You could be discriminated against based on, on a lot of different things, right? Male, female, the list goes on without clear evidence. So subtle discrimination becomes harder to challenge. Now, this isn't about discrimination per se. This is about banking rules that are changing with banks and credit unions so they can say, listen, we don't want to just approve everybody. Okay, let's see here. Now let's compare this to redlining. I'm just want to just give you just an easy understanding here because I want to make sure people understand the difference. So this is a simple way to remember that. For those who don't know, redlining was essentially where banks would say, hey, we're not going to give you a loan because you live in this area. Okay, that was legal before 1968. Okay, now here's the thing. We won't lend to you because of your race. That's what redlining is. Okay. Now, disparate impact means our rules just happen to lock you out. You did meet the criteria. So we're not saying that you can't do it or that we won't approve you. You don't meet the criteria. So lending criteria is changing, not just credit scores, just so we're clear. You're going to have to meet all of the criteria. Why are they tinkering with this rule in general? Because they want banks to start declining certain types of people. What types of people? We don't know yet. Okay, back in the day, it was clear. It was black or white. Let's be honest. That's just what it was back in the day. Right now, we have no idea why they're doing this. Okay, and this isn't just something because they were doing it because they were bored. This is something that is changing like dramatically just because of that. Okay, but again, you have credit goals and I can help you accomplish those credit goals. Of course, we're going to always keep you all posted on what's going on in the credit industry. Okay. But if you're looking to go into homeownership, increase your credit score, lower your monthly car payment, we can help you. That's why we stay on top of all changes that are happening here. Okay. So either way, let's go ahead and get inside the chat, guys. What do you all think about this change so far? All right, Mr. McNass is in the house. Appreciate you being here. 850 Club Elite is in the building here as well. Let me know your thoughts inside the comment section below. Is this a big deal or is this not a big deal? Either way, this is something that happens. I don't want I don't want anyone coming after me. I'm only giving you all information that the news had. I'm sorry, that the news won't share. But these are things that affect our industry, that affects the credit industry that people are not talking about. So when you apply for that mortgage and you you thought you met the criteria, but for some reason you don't, that bank doesn't have to do business with you. Okay. So this allows banks to come up with just random things, but let's be honest. Banks, they make money by lending. That doesn't mean that they're going to approve everyone or decline everyone, but that means that also if they're not saying no to people just to say no, then that means that what's the other outcome? That now they're saying, "Hey, you got to pay a higher interest rate because," right? You get less favorable terms because. So this allows banks to broaden the gray area of reasons why you have to pay more, why you have to pay an extra fee. Okay. So again, I'm not blowing this out of, proportion. This is something that's here. Okay. Pamela says that's pretty stupid, really. People will open up their own credit places and take their business from them. She says, especially if we boycott them. Listen, it's like we're gonna have to start boycotting a lot of things. But again, this is in its early stages. We're gonna start to see how this unfolds. Unfortunately, the only way to see the drawback from this is when it goes into effect and then people start applying and then people start being declined and then they start making either there's a lawsuit or they tell the news. If those things don't happen in that order, we won't know. But I'm letting you know why we're on our way to that direction. Okay. And of course, Neely says modern day redlining. You better believe it. You better believe it. And she also says, listen, there's something to think about. What if they use the currently previously thought opportunity zones as unopportunity zones? Oh, I believe it. This could be based on areas that you vote in. This could be based on, let's be honest, everybody knows where people live. Come on now. You like people say, oh, no, I'm not choosing this area because of this. And I'm not saying I'm not saying things in a bad way. I'm just saying we all know that we know. There are things we don't talk about as Americans that we just assume is known. Okay. But again, these are going to be these types of things where banks are not, they were never forced in a sense. There were quotas and things of that sort. But now this allows them to change how you are being approved if you don't meet all the criteria. For example, if you are a 620 credit score and you walk into a bank and you want to buy a home, banks did not, that stands till today. They don't have to approve you if they don't want to, but again, if you don't meet the rest of the criteria. And so now that broadens the list of criteria that you're going to have to make. So this is most definitely something we're going to keep our eyes on, for sure. Pamela says, boycott the ones that try to shut people out. More of us than their rich people. They are just kicking their own butt. Shame on them if they want to do this. We're going to see how this unfolds. Let me take here. Let's go deeper than this. A lot of times, I'm gonna be honest. Sometimes we do blame, let's be honest. Let's say, for example, people are blaming the Trump administration. I'm not saying that you should or should not. Just hear me out. The fact that this is even a topic means one of two things. Either the administration thought about it first, the Trump administration, or that means that banks and credit unions are having that conversation. So let me know in the comments and when you guys are watching this video what you think it is. But this is something for that we most definitely want to keep an eye on for sure. But let me tell you something. There's so many things that are happening every day or every week with this administration. And so again, these are the types of things is not going to make the major news. It's not going to make the major headlines. This is why I'm talking about it. You all can Google it anytime you want to. A matter of fact, I'll put the link inside of the description. I'm gonna start putting links in my descriptions so you guys can see that I know my sources on these types of things, but you can easily Google this and you'll see this because this is public information for sure. All right. But either way, listen, and Jamini says that's the problem. They have no shame. Yeah, it's most definitely been in our face this time this year. So we're gonna see how this goes. Again, it's not racial. I want to be clear. This isn't racial, but this is different. As someone else mentioned, and we're gonna end on this note here, where she said it. That was Neely that said this. She says modern day red lining. So we're most definitely gonna see how this whole thing pans out. Keep me posted, guys. Let me know if there's something that if you guys see some things that I don't see or that we don't talk about, you can always let us know. Send us an email to support@the850club.com. We want to make sure we stay on top of these things, and we got way more information coming to you. It's a lot of stuff. It's a lot of stories that are coming up, guys. We're gonna stay